You heard it first on ET now on the 8th of April, and now it's official. Chinese diversified conglomerate Fosun, which has assets of $75 billion, has joined the race for cash-strapped Fortis Health and has become now the fourth suitor in an intense bidding war, this 24 hours before the board considers multiple offers for the company. Ashwin Mohan, who broke the story, joins us now with more details. Ashwin, what does Fosun bring to the table and how does it compare to the other offers and the existing bids?
Good morning. Call it the late mover advantage, but China's Fosun has definitely entered the race with a pretty strong offer. We're given to understand that late last evening they submitted an unsolicited, non-binding offer for Fortis Healthcare. And from the details of the offer, we believe that Fosun is ready to pump in $350 million, but that is, of course, subject to 3 weeks of due diligence. Immediately, they are ready to pump in about 100 crore rupees. If you look at the valuation that is being offered by Fosun for Fortis Healthcare, it's about 156 rupees per share, and they're looking to acquire up to 25% of Fortis Healthcare. So those are the details of this offer. They are ready to wait to hear from the Fortis Healthcare board till 19th. That's the outer limit which Fosun has given. And tomorrow, of course, is 19th, and that's when the Fortis Healthcare board meets to take a call on the fate of the company. Now, if one were to compare it to some of the other bids, well, 156 rupees per share is equal to what the Munjal and the Burmans bid. The TPG Manipal combined bid at 155 rupees per share. As of now, it's a four-way race. And amongst all the four contenders, IHH is still clearly ahead in terms of valuation because they had bid the highest at 160 rupees per share. But if you look at Fosun and what it gets on the table, now Fosun, as you correctly pointed out, it's a huge conglomerate in China, cash rich, handles $75 billion in assets. It's no stranger to India because last year it acquired a majority stake in Hyderabad's Gland Pharma from KKR. So they've already pumped in about $1 billion in India. They also have pedigree and background because they are, in fact, involved in several healthcare situations in other parts of the globe as well. So they have the sectoral expertise. They also have the operational expertise. But, most importantly, the one facet which I think will separate them from the other bidders is that in their official interest, they have already pointed out that they are ready to settle any financial and legal expenses relating to any ongoing probe of the old Fortis promoters. So that is something which none of the bidders have openly and explicitly put forward. And settling legal and financial liabilities, that's going to be a huge cause of concern going ahead because every bidder will have a certain risk appetite. But Fosun definitely has thrown their hat in the ring and openly said that they are ready to settle legal liabilities. Now, that is something that could attract the Fortis Healthcare board in terms of the settlement of legal liabilities. But if you look at all these offers, the TPG Manipal one is the most comprehensive one, but it's a little more complex. All the other three offers are simple, straightforward offers where they want to infuse equity. So if you ask me, this entire bidding war will go down to the wire, just like an IPL game. And, with the entry of a fourth player, a cash-rich global player, I wouldn't be surprised if the Fortis Healthcare stock bucks up once trade opens later today.
But now there are four suitors coming by for the troubled hospital major Fosun, and ET now in fact first reported that on the 8th of April, and now of course it's official. Ashwin, thanks a lot for taking us through those details.